Hello everyone, this is Ricey and welcome to my channel, The Quest for Wealth. In this video, we will tackle the idea or the whole concept of what Metaverse is. Quite recently, Facebook had changed its name, its official name, from Facebook to Metaverse. But what exactly is Metaverse? In plain and verbatim words, Metaverse typically means the convergence of physical and virtual spaces. It is a futuristic virtual reality that is reimagined by 3D virtual spaces using the internet and augmented reality. Metaverse, then, is a completely virtual reality or 3D kind of reality wherein people can come in, pop in and out, and have an actual conversation with each other using either avatar or using its own self designed to occupy a certain space. Metaverse predominantly these days, or in this generation as yet, is predominantly used in gaming, online shopping, and entertainment. But this will grow into a further broader concept or further into different industries. This will grow into a business setting wherein people who live and work in different spaces or different parts of the world can essentially pop in and out of a certain room using their own avatar or using themselves essentially as a representation of themselves in certain meetings. Right now, what happens is that whenever there are meetings, it is indeed virtual, but what we see is just us looking at a certain camera having a certain discussion or a certain meeting with different people. It's not too dynamic, and this is essentially what Metaverse is trying to gap, being more dynamic, having that feeling in the 3D environment as if you are indeed in that world, having the discussion, doing the gaming, having the entertainment with different set of people from different parts of the world. The market size of Metaverse in 2020 reached almost $48 billion on revenue, and this sector is expected to grow at a compounded annual growth of 43.3% in the next 7 years. The Metaverse sector essentially is the technology sector, and the technology sector is a rapid growth industry or sector in terms of equity markets, and even in the industry itself. The technology sector is regarded as a disruptive sector wherein every 2 years the development of the different technology, different software, different hardwares is truly fast-paced. And therefore, if a company is not dynamic and does not move one step ahead of its competition, that company will certainly lose momentum and lose market share. In this video, we will tackle the top 3 companies which are worth looking at in terms of the Metaverse sector. Again, if you wanted or if you believe that these 3 companies are worth looking at, you have to do your own due diligence and make your own research and understand these companies. The first company in our list is a company called, well, Metaverse. As I mentioned a while ago, Metaverse used to be called Facebook, and the rebranding of this company essentially was launched a few weeks ago. I wanted to point out that the company's revenue grew year on year, as you see on this graph here. The top line and the bottom line have grown, but what I believe is worth mentioning is that the company's revenue growth is slowing. In 2018, the company's revenue grew at 37.35%. In 2019, it grew at 26.61%, and in 2020, it grew at 21.60%. This therefore means that Meta Platforms' revenue is growing indeed, but the growth is slowing down. There are various reasons that this is happening. Remember that the main source of income for Meta Platforms is ads. It's all advertising. The stricter the government regulations on the cyber environment, the harder it is for Meta platforms to implement its strategies. The second possible reason is competition. These days, with fast improvements and developments of technology, there's also the ease of entry of competition. And because of these two factors, the reason on why Metaverse or Mark Zuckerberg decided to essentially venture into a different sector altogether. Well, I wouldn't say necessarily different sector, but essentially add a different strategy to the growth prospects of Meta platform, which is then the sector of Metaverse, which is the 3D reimagining of the cyber environment. According to Mark Zuckerberg, the company plans to invest $10 billion into developing and improving the metaverse offerings of Meta platforms. And this is planned to be spent by the end of this decade. That means it is going to be round about 2030. And 2030 is just about 9 years from now, or even less than 9 years from now. If this is the case, so it only makes sense for us to invest on Meta platforms. The beauty of investing on Meta platforms right now here in Canada is that it is available locally through CDR, or Canadian Depository Receipts. The beauty of Canadian Depository Receipts is that it cuts off various costs to a regular retail investor. As a matter of fact, I did a video exclusively identifying and evaluating the pros and the cons and explaining what exactly is CDR. If you want to know more about CDR and how it goes, how is it traded, and when it started, and the pros and the cons of buying CDR, I will also link it in the description below. So going back, Canadians who want to invest and have a piece of action with Meta platforms are able to invest on Meta platforms without necessarily worrying about the volatility of the exchange rate between Canadian and US dollars. We don't have to worry about having so much money to buy one share of Meta platforms, which right now runs between 300 and 350 US dollars a share. CDR allows Canadians to buy Meta platforms with one fraction of a share, and second, without necessarily worrying about the volatility of USD and Canadian dollars. And I see this truly as positive. As a matter of fact, I have been establishing my position on Meta platforms through CDR. Now, some Canadians or some investors will say, wouldn't it be better to buy the actual share of Facebook by Canadian dollars to USD and then buy the actual share of Facebook and not worry about CDR because it is only a fraction of a share? The fraction or the ratio of CDR changes whenever the Canadian and the US dollar volatility goes up and down. That is one thing that you have to think about. And another thing is that there is a 0.6 management fee on the CDR, which the investor will have to pay. So in order for an investor to cut around or not pay and worry about this cost, wouldn't it be more sensible to just buy US dollars and then buy the actual share? And that also works. That could also work for sure if you will buy it one time or even 2 or 3 times in a year. If you will buy it in so huge chunk of a share, you can certainly afford to do it in such a manner or invest it in such a manner. But with regular retail investors such as myself, I do not have the amount of funds to allocate on Meta platforms to buy the shares of Meta platforms at say $20,000 in one go. It's not something that I would do with my Meta platform. So what I'm trying to get at is that there are pros and there are the cons of buying CDRs, and the idea is for you to truly identify which avenue is best suited for you. Now, I'm sharing what my avenue is, and that is through buying CDR. The second company I believe is worth mentioning and worth looking at in the sector of Metaverse is a company called Magnet Forensics. Magnet Forensics is a digital investigation software. Magnet Forensics software is used by more than 4,000 public and private sector customers in over 90 countries and helps investigators fight crime, protect assets, and guard national security. Now the world is essentially revolving around the Internet of Things. Every single thing that you would ever think of, need, and want to buy, would ever want to research on, are all on the internet. And because of the ubiquitous presence of the internet on our daily life, the data, information, sabotage, and misinformation even is truly within the realm of crimes. As a matter of fact, cybercrime is considered an absolute serious crime in the US and certainly here in Canada as well. And because of the fast-paced improvement of 3D and Internet of Things, there is certainly a need for policing on the cyber world essentially, and this is what Magnet Forensics is doing. Digital forensics is the modern day version of forensic science and deals with the recovery and investigation of material found in digital services and digital devices. Now, one thing I believe is worth mentioning is that Magnet Forensics went public back in May 2021. It's only this year, it's only public for so many months now. It's absolutely new in the public market, and therefore there isn't much financial information available to the public on the performance of the company in the past. And because there isn't much financial information available to us, it is very hard to essentially evaluate the actual financial status of this company, if it is worth buying at the price it is selling for right now. Today, as I record this video, this company is trading at around 33 Canadian dollars a share. Magnet Forensics hit the peak of its valuations back in end of August, beginning of September, and it was trading at over $60 during the time. And from that day forth until today, it has been dropping its valuation essentially. This company is right now trading at a price of almost 33 Canadian dollars a share. The ticker of this company is MAGT.TO. The third company that I believe is worth looking at or worth investing on in the Metaverse sector is a company called OpenText. OpenText is a company that helps different organizations and companies in transitioning from paper to digital processes. There are a few numbers that I wanted to show to you when it comes to the finances of OpenText. The company's revenue sits in billions since 2016. The company also sits on a huge stash of cash. And in case if you're not aware, cash is definitely king. Cash allows companies to pay for its labor, to pay for its workforce, pay for its supplies, pay for its inventory, and everything else in between. Even if the company have got so much assets but not enough cash sitting on its liquidity to do its own operations, then that would be a problem really. But with the case of OpenText, the company has got a huge stash of cash to sustain its daily operations. OpenText operates in 35 countries. The company also grows through acquisitions. These are the companies OpenText has acquired since 2003 until 2020. OpenText regards its cloud services as its highest revenue stream or highest growth opportunity in the future. Mergers and acquisition is the company's leading growth drivers. What I like with this company is that the management are truly aligned to providing value to shareholders. It says here 15% base salary reduction and forbearance of any annual variable cash compensation effective May 15, 2020 for the remainder of fiscal year 2020 and for all fiscal year 2021, totaling an approximate 60% reduction in targeted cash compensation for the CEO and the CTO. That is quite remarkable. I mean, the top management taking a hit of about 60% on their overall compensation because of what had happened in the pandemic season. It's not very common that you will read such a phrasing or such a sentence in a certain report of a company. As a matter of fact, it's the first time that I saw that the top management took a hit on the overall compensation because the company might suffer from the overall effect of the pandemic. The other beauty of it is that this top management took a hit, but they did not cut the salary and compensation of the people below them. As a matter of fact, with the salaries and compensations of the workforce in Asia, they did not cut any of those compensation because people or the workforce in Asia essentially earns a lot lesser than the other countries where this company operates on. So I see essentially the integrity of the management in this kind of decision making, and management integrity and concern of the management on the overall health of the company, not just their own compensation. That is a beautiful thing to see in reports essentially. And that's one thing that I wanted to provide to you as well, the integrity of the management of OpenText. Currently, this company is selling at about 66 Canadian dollars a share, and this is the highest valuation of the company thus far, as it is really with most companies this point in time. Really, so many companies just reach their highest valuation. I received various messages on Home Depot and even Netflix reaching their highest valuation, and even Microsoft. So those are the three companies I believe are worth investing on in terms of the Metaverse stocks. These companies are all in the Canadian equity or Canadian stock market. I try as much as I can to really focus on the Canadian stock market because there are many opportunities in the Canadian stock market as well. Although our economy is quite small as compared to the US, I guess really any other economy is smaller when it comes to comparing it to the US economy. Thank you very much indeed for watching this video. If you gain value in this video, please like, share, and subscribe. And also please check out my website here and sign up on my newsletter so that you get to be advised on the various savvy tips when it comes to investing and saving. I certainly hope to see you on my next video.